What up, everybody? It's Lonnie here, Charts and Labs. Going back to back on this video. I just made another one where I got a little carried away talking about the bots in the TXC market. And by request, had somebody mention talking about like a Crypto 101 for beginners kind of thing. And it reminded me that before I started making these videos, I was doing these long write ups. I used ChatGPT to help me a little bit, but a lot of these were typed up by myself back in the day, and this all came from a Texacoin discussion group. I believe this is the Hummel couple channel, and I started by doing these really long uh, write-ups and describing the market and conditions and all these terms that I've been doing in these videos because I was not ready to be in front of a camera. I didn't have much of the setup that I was able to come across. My buddy helped me out getting this microphone and the dual screen and doing all this stuff to be able to help me make these better. So I was typing these all up by hand and having to do these big video presentations, and then I was writing and talking through the comments. And that's where a lot of people were asking, like, hey, I'm kind of more of an on hands or can you go through it learner and not just showing the pictures of how to look at it. It would be helpful. And that's what kind of started in October, was me typing these up. And then around November 16th, I started making the videos, and I'm having a blast with it. So I want to thank you guys for encouraging me to start doing this. I never would have done this kind of without you guys, I guess. So I'm gonna have to throw a shout out for Jason and Jennifer, I believe are their name, Hummel. I hope I'm not butchering your last name, but shout out and thank you for providing this this community group that kind of encouraged me to start making these videos. I'm having a blast talking about it, and I hope that I'm helping everybody gain the confidence and familiarity, because I'm not a financial advisor. I'm not a financial guru. I don't have any certificate telling me that I'm smarter than anybody. I just have some experiences with this, and I have a basic understanding that I don't mind explaining to others, hoping to give them the familiarity to be able to make these investment decisions on their own comfortably and confidently. Crypto specifically is a very high risk asset, so be careful in the crypto markets. If you want to look for safer investments, there are bonds and dividends out there. But crypto is fun. Crypto is, a huge, growing kind of area that could be really big in the future. And if you're trying to jump on board with these projects, early ones like TXC could be pivotal in community currencies and these downtown digital dollars and state, kind of back theme projects. Um, early bird gets the worm. So it's kind of one of those things. If you're jumping on board, that's what you're looking at. But to digress back to what the topic of this video is some Crypto 101 terms and phrases. So I just went back to my original post because I wanted to pay homage to it and give the Hummels a shout out again. So what I did is, some people were looking for the phrases. I asked ChatGPT to give me 20 to 30, and it listened very well and gave me 33 phrases to be mindful of, and I'll try to explain them a little bit deeper beyond that. Some of these I edited or added to slightly. If there's a certain term or word that you have heard that you have not, that you didn't see in this video or you didn't see in this post, comment it, and I will respond and look up and give you the best broke down definition, because I know sometimes the definitions themselves are definitions that are the definitions themselves have terms that are unrecognized. So trying to break these down a little bit more for you. So cryptos, the basic of it is a blockchain and network fundamentals. The blockchain is a decentralized digital ledger that records transactions across many computers. There are some of these blockchains that are still centralized that that we're seeing as banks are getting involved and adopting these processes. Decentralized means that it's hands-off, automated. No one entity or one person has control over it, or sole control over it is, I guess, the better terminology of it. Decentralized meaning that there's no oversight and it's hands-off and operates on its own. So then you have a node. The node is a computer that participates in and validates transactions on the blockchain network. Um, that's like a mining process or a computing process, or for the transaction of other networks. Um, this is the actual work that the cryptocurrency is doing, or the tool that's doing the work. Smart contracts are what creates that decentralized theme. Smart contracts are self-executing code that runs on the blockchain, giving it that decentralized label. And when present conditions are met, stuff happens automatically. Boom, boom. So then you have gas fees, or something that you hear. This is typically stuff you'll hear on like Ethereum or Solana, which is like those proof of stake networks that are not mining typically. They're built on transaction fees and processing transactions. So that's what those are. Validators, our miners are processing transactions on networks. Layer one is that base blockchain. Those are your Bitcoin, Ethereum, Litecoin, and TXE would be considered a layer one. Layer two is when you start scaling on top of that layer one to build the utility. A lot of the layer ones are not as much a specific utility, they just allow for a utility. And then the layer two becomes the utility um, that, that creates an extra value and creates usage on the network. So then when you look at tokenomics, that is the economic design of a token supply, distribution, utility, and burn mechanics. That's how the coin works, how the project works, what they're doing, and how they're doing it, kind of thing. When you get into discussing a market cap, that is the total value of the cryptocurrency, which is the price of the coin and the circulating supply. Certain coins have a fully diluted value that you'll see, and I don't know if that was a term on here, or FDV. And some coins are automatically start out fully diluted. So fully diluted value of FDV or full dilution, any of that terminology, is when the crypto is complete, when the mining is complete, or if the network is established. However, they bring on the supply of all the coins. Once that's complete, that becomes the total supply. And for mining projects like Bitcoin, even who's been mining for, what is it now? Going on like 15, 16 years, oh 09. Even Bitcoin is not done mining. There's a 21 million total supply, and only like, I think it's right around 19, or maybe it just crest into the 20 million have been mined. So like TXE, 62 million have been mined. There's a 353 million total. So circulating supply is what's available, and total supply is of everything. So that's something to be more mindful of in like in the mining, the POWs, the proof of work coins and such. But some other tokens don't have a full dilution kind of thing. There's some that are in lockup or something. And then liquidity is a big one that's talked about a lot. So that there is a liquidity value, and even the liquidity can be broken down into like a liquidity backing, or like a active liquidity. So like for ChatGPT's definition, it's how easily a crypto asset can be bought or sold without affecting its price. That is, when you look on the market and you see the plus or minus 2% depth, that is kind of a testimony to the liquidity. But the liquidity is like how much of the dollars are transacting in that. If you think of liquidity like a pool, um, and if you have a pond, that liquidity gets filled up, or a pool gets filled up, and then it's used and can be taken out. Water can be taken out or added, and that's how it balances. But if only water is taken out of a pool, it drowns. When you have something that has like a liquidity backing, or like a steady stream flow kind of thing, you get more like a river running into a lake, where even as you take water out, there's still water coming in and replacing it. So the more liquidity you have, kind of backing and flowing into a project, the stronger that body of water will be, to where, as somebody comes in or out, it doesn't drastically affect the market conditions. So like, XRP has a huge liquidity pool Bitcoin has a huge liquidity pool. Ethereum, all those top 20 tokens have very huge liquidity pools because there's a lot of activity and a lot of money going in and out, and backing and investing. Projects like TXC that are very young, and have not had a very steady market dynamic, in its infancy. A lot of the market was kind of faux in the beginning, and that's created a very illiquid market, which means that it's not that the liquidity from the sales that they're providing to help support, that they're injecting, that they're dumping that water into the liquidity pool. That's not what we're relying on. The liquidity that needs to come from is from more of like the investors and traders and people like that who are willing to buy the coin and keep the price afloat, kind of thing. So being such an illiquid market is just because there's not enough action on the market, that the buy side of the market holds the price up for a sell side to not drain the pool. Um, DeFi, decentralized finance, is like a blockchain used financial system that operates without any intermediaries. No single person, a bank, or entity has total control over the finance. Yield farming is earning returns by providing liquidity or staking assets in these DeFi protocols. Those will utilize smart contracts. You basically lock up, you buy an asset like Ethereum or Solana, and then you lock it up, and they provide you yield through this staking, where you lock up the tokens to help secure the network, so that you're providing liquidity that you're not going to sell, that you allow to be carried across for the transaction fees and for that stuff, and then you get a reward for not selling yours, essentially. Lending your coins to be traded in an exchange or used for transaction fees. You're paid a percent for allowing them to lend and borrow yours to process those. Having cycles, mining distribution shrink becomes a demand, the trade, the coins. So APR is your annual percentage rate, and then annual percentage yield. Just different ways to measure what your earning is for the staking, or for however you're lending your coins. Um, HODL is a slang term. The joke is that somebody was trying to talk about holding on to Bitcoin and was yelling at everybody to hold, and the typo, he accidentally sent HODL, and then somebody was, as questioning it, what the heck does that mean? It ended up becoming hold on for dear life as things are falling down. So with TXE in a major downturn right now, the community is screaming HODL. Um, and then FOMO, fear of missing out. That's when there's hype and momentum and things are running crazy, people run into these, and the FOMO, I don't want to miss out. And then this is in positive, typically. Positive markets, you hear a lot of FOMO, people running in. FUD, you hear a lot of the negative. You get a lot of people who come into projects who are sitting sidelined, whether they missed out or they just didn't like the project, and then they want to be able to brag for their ego to say, I told you so, or they're trying to turn attention to their project that they like better, or they want to feel smarter than everybody. And so they come out of the woodworks, and what they'll do is they'll spread fear, uncertainty, and doubt. Some of these people are paid shills or paid dumpers from other projects. You'll see that a lot more in like stock market stuff. Intel's one that I follow very deeply in the stock market, and one of the strongest computer tech companies in the world. And after their last CEO left on bad terms and the price dropped drastically, there's a lot of FUD of people coming out, and they're often fake accounts even, claiming that Intel is going to go bankrupt because of the bad decisions, and don't buy. And what's secretly happening is people are actually loading up and buying, and they're trying to make you not buy so that they can buy more. Is a typical thing that you see the FUD spreaders are doing, is they're creating the fear so that you don't buy so that they could take advantage, or they have a short position. And things like TXE don't have the margin requirements or liquidity ability to be able to do any kind of short selling, so it's not something like that. But there are some ego people, or they're just trying to buy, so we could secretly think that they're buying. That's all the psychology of the market, and that's what that is. Somebody who gets labeled a whale is an investor or an entity, could be a bank or a group of people, holding large amounts of a cryptocurrency or just have a ton of cash that can come in and buy a position and move the market. Pump and dump is often related to like the meme type coins. It's where so much FOMO gets hyped up in the beginning of the project, it runs up, and then as soon as they get out of it, you hear the term rug pull, where a lot of times early adopters or early whales or early investors start selling, and somebody always gets caught holding the bag at the top. So quick flash in the pan, up and down is your pump and dump. Um, Very common in meme coins. No utility is what you'll see in those. So those are always the race to profit, race to capture, and don't get caught holding the bag. Bull market, bear market are terms that you're going to hear. You know, it's funny, as bad as crypto has been this year, where it's technically down like 6% from the beginning of the year, it's down 30% plus from its highs. Just now, Bitcoin got termed yesterday or labeled bear market. And so bull market is obviously positive, prices moving forward. Bear market is negative, prices going down. And through my experience with equities and stocks, bull markets typically last years, where bear markets only last months. The bear markets are always a lot more sharp and sudden, but they're shorter. Bigger move down, but a shorter time span. And then the bull markets typically are not as straight up or not as erratic, but they're longer lasting. So once you get out of your bear market, you typically see a longer bull market. Just experience in these, that's not always guaranteed. Just stuff that I've seen as a regular. Your private key is the secret cryptographic key that allows access to one's crypto assets. These are things that you're going to see in your wallet. The public address is the account number used to receive the crypto. Always be very, very careful with this private key. That's your password. Don't give access to anybody that you're not trusting in, and don't let somebody rush you into giving that. Anytime, because crypto is very big for scammers and such, anytime you are feeling rushed to do something in case of an emergency, or if you don't do it now, it's too late, wait. Try to wait and do your best to verify, because if you give your private key, somebody can get in there and take your assets, and that sucks. And there's been a lot of it gone in TXC. There's been a lot of it in every project where people have been preyed upon by the scammers. Cold wallet, hot wallet. Basically, a cold wallet is offline, off the networks, not connected. These are very safe ways to store your crypto assets. A hot wallet is online and connected to the network, so you can move money to the exchanges, and they're connected to the exchanges to be able to trade them at the market. You know, I kind of think of your cold wallet as your savings account and your hot wallet as your checking account, kind of thing. Hash rate or hash power is something that you're hearing a lot for mining coins and for the TXC project itself. That is a computational power used to process these transactions or mine coins. So when they are the algorithmic problem solving that they have to do, the better the hash rate, the better the computating power is. And then you'll see like things like there's a minimum hash rate in order to solve and create this, but a greater hash rate creates more consistency, creates more redundancy, a more stable network, because there's going to be loads and burdens on the network, whether it be the actual utility and a power burden, or just a network issue where there's less internet connection, where it slows down, the network slows down or stalls, and then that could create issues. But if there's better hash rate, better power, that consistency stays throughout. So if something is a fork, it is a change in a blockchain protocol that creates a new version, like Bitcoin Cash was a fork from Bitcoin. Airdrop is like a free distribution of tokens to users, often as a promotional or reward mechanism. Like, hey, congratulations, everybody, we sold out the mine. Here's an airdrop of 1 TXC for everybody. That could be something that would be an example of an airdrop, a little bonus promo. So ecosystem buzzwords The DAO is a decentralized autonomous organization that is a community run organization governed by smart contracts where the individuals don't press yes or no. They just oversee and develop the contracts that automatically execute all of the actions that the network is doing. You'll hear the term NFT. These were very popular back when crypto got really exciting not too long ago. It's a non fungible token. This is a unique digital asset representing ownership of an item, artwork, collectible. A lot of these are digital assets, specifically like pictures of stuff. Um, there's also some NFT work going on, like on Meta, where they're trying to make it real estate backed. So some crazy stuff going on there. Bridging or cross chain is moving assets between different blockchains. A DEX versus a SEX, CEX, DEX, decentralized exchange, peer-to-peer exchanges without intermediaries, no banks. A CEX is a centralized exchange, which is most of the ones that have any kind of bank ties to them. Coinbase, Kraken, all these guys are considered CEXs. To do the opposite of a DeFi, CeFi is a centralized finance, which is a crypto financial service controlled by a company like Coinbase or Binance that has banking ties. When you take a token and you wrap token, a tokenized version of one asset on another blockchain. So in TXC's example, a WTXC or a wrapped TXC coin allows for that TXC native token to be moved across the Ethereum network. So these were just some of the ones that ChatGPT said are popular terms to think about. And I just kind of read those off to you because some people like the video explanation for more in depth. And then this is just a quick scroll from the beginning. Back in the beginning of October, I was doing posts like this and typing up long summaries. So crazy how far this channel's come from me not knowing what I was doing, not being one to get in front of a camera, not having dual screens, a microphone, and all this. So I thank you guys for encouraging me to do this because this has become very, very fun. I'm enjoying it, and I hope it is helping you guys with your experiences, not only in just TXC for the community that's asked for these videos, but also because this has given me access to talking about options trading and other investments like in dividends, or we're going to look at real estate and commodities coming up. I want to get into the gold, silver, platinum, and antimony. Antimony is one that I want to make sure everybody's aware about. It's kind of an under the radar. This is a precious mineral. And I know that there are some people who like investing in that type of stuff. I would love to get into some entrepreneurial talk, whether it be through YouTube live interview stuff or Zoom calls or something with other entrepreneurs and talk business, whether it be fielding questions about how do you start a business, what processes do you go through, what tools are needed to kind of help start, and where to look. I really want to branch into all that. That's all stuff that's fun for me. I mean, again, I'm not a professional. So take it for what it is, but I like talking about it, and the more we talk about it, the more we all learn. So the more that we talk, the more I learn. The more that we talk, the more you learn. It kind of just stems into something that I say a lot is friction creates fire. So if we at least discuss it, it creates it. So again, thank you guys for the support. It's been crazy, and I hope that everybody is having tons of success, whether it be TXC, the stock market, or however you are. But let's build wealth together, do it ourselves. We don't need the banks to do it for us and get rich on our backs. So have a good one, everybody, and I'll see you guys on the next one.